Hello everyone and welcome to Finance JCR. Today I'm going to go through the 1 million investment challenge, how the portfolio is progressing against the challenge. So it's the March 2021 update. Alright, let's go. I'd like to begin with a quick refresher of the challenge. I want to become a very long-term investment millionaire through compounding. Easier said than done. And to achieve this, I must make a minimum average return over the period of time of 6.66% per year. And that is higher than most asset classes and is certainly achievable by index tracking. I do have a stretch target of 10%, so I may pick some individual stocks to try and boost that return. And I'll be investing £300 a month, and it starts off with 20,000 back at the beginning of 2020. It's very much a test of discipline over the long term. Can I consistently make this return to hit the objective? I hope to learn a lot along the way, share that with you, and hopefully this could either inspire you or you could maybe even laugh at me if I don't make it. So let's see how we're going. So let's now look at the portfolio value. As a quick refresher, the February 2021 update, the value in the portfolio is about 31,000 against a base target of 30,192 and the stretch target of 31,760 by the end of the year. So it's already tracking in the right strike zone. There was due to be another 3,300 to go in, so that estimated year-end value 34,260. So very much on target as of Feb. So big smiley face for that. And now we look at March. So the current value has increased by 3,250 in the space of about 5 weeks. So I'm really delighted with that. Part of that is because another 600, so February's and March's deposits have gone in, and there's still another 2,700 to go for the end of the year. And the estimated year-end value is now just shy of 37,000, so tracking well above the targets there. And that's an increase of 2,650 from last month. Of that 2,650, I've invested rather, another £775, and that's due to spending below my budget due to the lockdown, much lower fuel costs and much lower spending costs. So I invested another 775 above the minimum deposit threshold. And then the other 1,900 is actually investment gains. So that's a very big proportion of investment gains in the last 5 weeks. I'm really pleased with that. And it's being driven by a handful of core holdings. So summary is it's very much on track, really happy with it. Let's see if that can continue, because of course month to month it'll be volatile as markets and stocks can be. Key is over the very long term, can I maintain this pace? I like to see things in a picture sometimes. I think this brings it home quite nicely. So the red line on the bottom, if we to plot that, is the base target for the year end. The green line is the stretch target, and you can see the black line of where we're at the moment is tracking above both the year-end targets for this year, and we're only in March, so that's really good. If I go back to the portfolio I started with last year, and that contained some funds and some individual stocks I bought as far back as 2013, that is showing a 9.21% a year return, and that's only on the individual stock picks. So the individual stock picks that I've made myself, so not the funds, not the indexes, etc., that's tracking at 9.21% a year, going back all the way back to 2013. That's pretty decent. I'd love that to be 10%. So just a bit of information on how the portfolio is segmented. Here are the values with the changes from last month. So it's broadly unchanged. Individual companies, 56% of the portfolio, up 2 percentage points, and that's just due to some strong performances. And yeah, commodities gone from 2 to 3%, and I'll touch on that in a moment. And a slight drop in the index trackers and managed funds. You'll notice that doesn't quite add up to a net zero, and that's just because of the rounding. So portfolio changes. Haven't been any significant purchases or indeed sales since the last update. I've topped up on K3 Capital. I've topped up on Turtle Beach after its recent drop, and topped up on Inmos. There's 3 companies I really like there. I've taken some profit on Diamondback Energy, so that was up. I think I was up about 85% on that, so I took some off the table. It's a bit of a cyclical company. I've actually covered my initial purchase cost. So 7 shares, I've sold 4, so I've basically got 3 shares that are effectively free. And I'm going to let those run a bit more. So I think the oil price perhaps might tick up a bit, but not as quickly as it has done in the last few months. And for my friend Adam in particular, I've started a very small Bitcoin and Ethereum position, and that's actually through some of the grayscale ETFs. And my thesis is that if I have that as perhaps 1, maybe 2% of the portfolio, and I'll buy them on any significant dips, 20, 25%, I'll just add tiny bits in there. Mean that if it does 10x, which is what some people are saying, which is what some research suggests, over the next few years, then that will have a big impact on the portfolio, but it's not really a true investment for me. So I want to keep it to a couple of percentage points at the most. So that comes under the commodities section, that breakdown we saw a moment or two ago. So top 6 stocks, Walgreens has dropped off that list, not because I've sold it, it's just dropped down to 8 because some others have overtaken it. One is K3 Capital, so I've topped up, as I mentioned on the last page, and Shell is now my 7th biggest holding just because that price has been ticking up with the oil price increase leading that. See here why the portfolio has been doing very well recently, and that is in the last 5 weeks or so, the top 3 holdings, the biggest 3 holdings, have added some significant gains to the portfolio. Bank OZK, my favourite company, that has got up 27 percentage points in the last 5 weeks. I'm now on a 74% total return. It would be even higher if it wasn't for currency fluctuations. But absolutely delighted with that one. Unum Group as well, that was just kind of plodding relatively level before, 5 or 6% up. Good dividend rate, however. That's now taken off in the last few weeks, so that's up 25 percentage points last time, so 32% total return overall. And Aviva has also performed well, so that's up 13 percentage points since last time. So that's a 28% overall return since I bought it last year. All of these I've held for less than a year, so I'm not applying a compound annual growth rate figure to them. But when I get to a year, then we can start looking at that. Unilever I've had since, I think it's 2013, one of my oldest holdings. That's been pretty much flat since last month, so you're getting 9% a year off that one. And say K3, I don't have the last month's figures for it because it wasn't in this table last time. That's given me a 38% total return. Now it was getting towards 90%, but then I averaged up, which is why that has dropped. It's still gone up a little bit since I averaged into it. I expect it to keep going up. Finally, last but not least, in the top 6, Dropbox, 15% return on that in 6 or 7 weeks. So that's pretty pleasing. So very happy with how the top 6 are going. They're all showing very good total returns, given that 5 of those 6 I've held for less than a year. And the lowest is 15% there. So what are my learnings from this? Actually, the ones I've gone biggest on, companies I feel best about, I had the highest conviction on. And therefore, if you look at those returns, compare that to the portfolio returns, the other aspects of the portfolio must be doing a lower percentage than these 6. And what that means is perhaps I should be more concentrated, but even more into the holdings that I'm most certain of, perhaps not certain, I have the highest conviction on. And that would actually make the overall portfolio performance much higher. And perhaps that's something you can think about. Maybe it's the Warren Buffett approach, have less stocks but be more concentrated in them. So that is it for today. I thought I'd share that with you, see how we're going on the challenge. I'll probably drop in another update in a couple of months' time just to see how that is progressing. I hope you found it useful. Perhaps it's given you some ideas for your portfolio. But as always, it's not financial advice. Don't just copy me. Make your own decisions, but hopefully it's given you some things to think about, perhaps a bit of inspiration. And let's have some positivity. There's a lot of negativity in the world these days with the CV situation. So the stock market in the last year or so perhaps has been a positive for a lot of people. So let's be thankful for that. So the channel also covers some other areas, not just my portfolio and progress, which is what's happening for this video. I do company reviews. I've got kind of background to investing, investment terms, and also some personal finance stuff. If you're interested in all that stuff, please do join me for another one. And if you like this video, do hit that like button, please. That'd be most appreciated. So yeah, thanks for joining me on this one, and yeah, look forward to seeing you next time.